Welcome to Larkin-Gowan Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hi, and welcome to FUNdcast, our charities podcast miniseries where we take a deep dive into the issues that matter to charities. I'm Emma Hayward, and this is my colleague Giles Kerkham.
Hello, everyone.
We're charity advisors at Larkin-Gowan, and together we're going to explore a range of hot topics that are challenging charity leaders at the moment. We're looking to have some fun along the way, whether you're already involved in running a charity or simply looking to be inspired. FUNdcast is the podcast for you. So, Giles, what are we going to talk about today?
Well, our title today, Emma, is Myths. This is prompted by an excellent and very interesting report from the Institute of Chartered Accountants called Dispelling Common Myths About Charities. They say that charities need to set out clearly how they are run to combat common myths and build public and donor confidence in the sector. And I think, so what's this all about? Well, their concern is that charities can sometimes attract criticism about whether they're using the right mix of volunteers, say, and paid employees, or whether too much is being spent on senior managers and overheads. We see reported in the press incidents of malpractice in the charity sector, and this influences how people think about charities in general and about specific charities, and this affects how much people will give in money and time. We know that charities are very, very dependent on people having confidence in them in order to give money and in order to give their time as volunteers. So this document, I think, is timely. The way they set it out as a discussion around 10 common myths. Right.
Obviously, 10 common myths is quite a few. Are any of them that really pique your interest, are particularly interesting?
Well, I think some of them are ones that we talk about often, and particularly when we're talking with trustees, particularly in the context of how they describe their finances and their accounts. One is that charities have too much overheads, and in particular, they may be paying too much to their senior executive. Secondly, that charities don't pay tax, with the implication that they need less money. They don't need to raise so much money to run them. And it's unfair against other people, other shops, say, in the vicinity of a charity shop, so it's non-competitive. Thirdly, that charities shouldn't do campaigning and politics, and that's, of course, only partly true.
Okay. Certainly, we do hear a lot about overheads and exec pay. This seems to be in the local and national press all the time. So what do they find out? What's the data? What is actually happening in this with regards to this?
Do you like a statistic, Emma?
I love a statistic.
Do you like a survey?
I do love a survey.
Okay. Here's a survey. UK Charity Society Almanac 2022 says that 86% of the charity sector's expenditure related to activities directly linked to a charity's purpose. That's really good. That's directly linked 86%.
Yeah, absolutely.
It's really good if we think that donors want most of their hard-earned money to be spent on frontline activities, and we think that is the case. I think also on the other side of that, most people understand that an amount needs to be spent on a charity's running costs.
Of course, absolutely.
But I think it's unfortunate that concern about presenting low administration costs leads some charities to claim that to feel they need to claim that all income raised, they will make an appeal saying all income raised will go directly to the cause.
But surely they can't do that.
Well, you can have an appeal such that all income goes to more spend on the cause, but the problem is that it implies that there are no overheads. And of course there are overheads, and someone's got to be funding those overheads. I think I would turn this around, right, and say, imagine a charity that doesn't adequately cover IT security. It doesn't manage risk. It doesn't have appropriate risk management processes. That doesn't train and coordinate its staff and volunteers, which is another overhead. That doesn't cover safeguarding or doesn't invest in management skills. It's at least you can say that charity is likely to be less effective than a charity that does have those functions and is paying, and they of course need to be paid for. Having said that, trustees do need to have a clear grasp of the charity's cost base so that they can better assess where they might make savings or where more investment would make the charity more effective in the longer term, for example, through automated processes.
Yes, but I understand that, but we're not talking about automating of processes. I know, and I've read in the press, that people perceive that CEOs earn a lot of money, and actually, that's money that people have given. And is that right?
Well, I think if the press, it's a story if someone's earning a lot of money. It's not a story if a chief exec's earning a moderate amount of money. But to put it in context, the majority of charity executives earn what I would say is modest salaries. There are reported cases of supposedly excessive charity CEO salaries that create a narrative that charity execs are overpaid, and that this diverts funds from the causes charities set out to help. And charities need to be prepared to discuss their executive salaries and explain them, and they need to be open about them. Pay for chief executives do vary, and here's another stat for you. According to the Pay and Equality Survey of the Association of Chief Executives of Voluntary Organisations, which is ASIVO, some will know, the median basic salary for charity CEOs in the UK last year, 2022, was £56,000. When the survey first began in 2013, 9 years before, it was in fact 60,000, so slightly higher. So it certainly hasn't increased.
Certainly not. That certainly is not the astronomical numbers we're hearing about in the press.
I think it is a difference. There are different numbers when you get to very large charities. And when you get to, say, the UK's largest 100 charities, the median salaries have been reported at £175,000, which is much higher. And it might seem high, and in some cases it probably, I suspect it is high, but these highest earners are running the largest charities, which are extremely complex and where income levels are hundreds of millions of pounds. So charities need to strike a balance in their remuneration policy. They need to be able to attract executives with the right skills and experience to run those charities effectively. So they need to offer appropriate salaries. But they also they need to be really careful that they don't alienate their supporters or divert funds away from the mission.
Yeah, I mean, certainly that's a difficult balance to strike. And what can trustees do to get that balance right?
It's difficult. Fundamentally, trustees need to ensure that funds are properly spent to the best advantage of the charity. And what do we mean by best advantage of the charity? But towards the beneficiaries. And there are a number of methods of doing this. You can benchmark to other charities, you can benchmark to subsector standards in some cases.
So is there any place that we can find this information about the highest paid employees? Are they disclosed anywhere?
Yeah, and to an extent, the regulation is by disclosure. You will find good information in charity accounts, which are very easily available from the Charity Commission website, if not also Companies House website for charitable companies. The accounts will disclose the total remuneration to what's called key management personnel. Some accounts will say what's in that. You will also see previous year comparatives, so you'll know whether it's gone up or down. That is sometimes of limited use because you don't always know which individuals are in there. So what does 300,000 mean? Is it one person or is it 8 people? More useful is in the staff in the payroll note, you will see bandings of higher paid individuals in bands of £10,000. So it might say there were two people earned between 110 and 120, and one earns 150 to 160,000. That is useful. Also, at the front end in the trustees report, there will be narrative for a larger charity about how trustees have set and reviewed the pay of higher paid individuals. So it should, if they've used benchmarks or they've referred to particular sector information. It can come unstuck. Where these can be opaque is if a senior individual is off payroll.
Does that happen often?
Some sectors it can happen. So if someone's a contractor, they won't necessarily appear there. But generally, you're getting good information out of accounts.
Okay. You're talking about, accounts and disclosure and information that we can see in accounts. I know that we can also look at fundraising spend, and I love a stat. I understand that the UK Civil Society Almanac shows that for every £1 spent on fundraising, the average charity receives £4 in return. So that's not a great return, is it?
Well, I think it depends. We put it this way: if a proposal is made to trustees to invest £10,000 in the expectation of £40,000 income, should they go with it? I mean, if a commercial organisation was offered that, that'd be a terrific return on investment. Having said that, if I'm being asked to donate to the charity £40 and I know that £10 is going to be sucked up in fundraising costs, I might try to donate somewhere else. So partly it's about explaining how those costs are incurred. But if you put it the other way, charities, coming back to this, charities need to raise money. They know that if they spend a certain amount, that they will get more back, then that's what they should be doing.
Okay, yeah, fair enough. After all, they don't pay tax, do they? I mean, they are generating funds and they're not paying tax. Is that
well?
Is
That's
that fair
not
to
you
say
know
that's
that's
correct?
You know that's not true, Emma.
I want to enlighten our listeners.
I know that you're devil's advocate here. So the biggest reason to become, well, there are two reasons really to become charities. One is that it enables you to access more funds, so it's for fundraising, and that might be to access more grants or just to encourage people to donate to you. The other reason is a tax exemption. The two biggest tax exemptions by value in total to the charity sector are business rates exemption, the mandatory business rates exemption, and also gift aid. They are also corporate exempt, generally exempt for corporation tax on their primary purpose trading. So most often they don't pay corporation tax.
So most charities don't pay corporation tax, is what you're saying.
But they may be trading, but if they are trading, they generally use a subsidiary trading company to trade through, which will then donate their profits to the charity. So in effect, that converts a taxable profit into a non-taxable donation. Right. Getting back to, do charities pay tax? They certainly pay VAT. And VAT is nasty and complex for charities because the reason for this is that effectively VAT is a tax on the consumer. So you or I, when we go to the shop, we pay VAT. When we pay for services, we pay VAT. Companies don't, because generally trading companies, because they can reclaim the VAT that they suffer through their monthly or quarterly VAT returns. A charity is a mix of the consumer and the commercial trading company. Some of the things they sell services for, and so they act like a commercial company and recover VAT, so they're VAT neutral. For some things, some activities are fundamentally funded by voluntary income, by donations, so they're not trading, so they don't get the tax back. And then there's a nasty mixture of zero rated and exemptions, so it's a real mess. It's, of course, VAT is a an EU tax, so Brexit presumably gives an opportunity to simplify and make fairer and a more effective system for charities. But let's not hold our breaths for too much just yet. The other side, of course, is that charities certainly pay payroll taxes, just like any other business. There's national insurance and income tax off their employees. So they do. So certainly they do pay tax, and in some cases it's nastier and more complex, and they have a bigger administration burden than other organisations.
Okay, so they do pay some tax. Fair enough. So what about campaigning? I know that we are hearing criticisms that charities that are politically campaigning, is that appropriate when they're using public money?
Think, for example, about Age UK. Now, their purpose is a well-known charity. Their purpose is to create a world where older people can live free from poverty, isolation and neglect. And it does this in part by campaigning for changes in policy and practice. Yeah, so it might, for instance, it might petition to protect the state pension triple lock and campaign against benefit cuts, which are very specific campaigns against aspects of government policy. And they're trying to change government policy and law. And that's appropriate, and that's okay, and that's right and proper. And if you're going to complain against that, it's probably because you disagree with the change.
Right.
However, there are boundaries. There are certainly boundaries that charities are staff and volunteers, and you need to make sure this is well communicated in your charity, need to be aware of to remain within the law. So, for instance, if a charity is campaigning, this must be closely aligned to their specific cause, and it must further their purposes. These are the purposes that are in the Constitution. If you're not sure about those, these are explicitly stated on the Charity Commission website for your charity.
Right.
You can't just campaign for a cause because you think it's worthwhile. So if it's a non-environmental charity, should it be campaigning for the environment? Probably not.
Right.
Secondly, you've got to remain independent of party political bias. You can support a policy endorsed by a political party, going back to Age UK, if, for instance, the Labour Party was campaigning to protect the pension triple lock and the government, Labour Party in opposition, and the government at the time was looking to attack this, you can campaign for one side or the other, and you can work with political parties and with candidates to influence decisions of those parties and their policies in support of charity's purpose, but you mustn't support or promote a particular political candidate or party. So, for instance, you need to be very careful if you appear on a platform. And charities are sometimes criticised, rightly or wrongly. These are often sorts of difficult appeals where charities appealed on a political platform with a particular politician. And also, and as another overriding principle, political activities can't be the only activity that the charity carries out. So Age UK isn't just politically campaigning, it is obviously delivering a wide range of hugely valuable services with politics as political activities as just one aspect.
Thank you. That's really useful to clarify. I certainly have learned something there. We've touched on a few of the issues in the myths. We said there were 10. What other myths were raised in this survey?
Well, I think before I come back to them, I'm just going to say that there's one thing I do need to mention. Where we were talking about overheads and about whether all costs whether you should appeal for income directly contributing to the cause, I think charities should remember when they're applying for funding to include the cost of overheads. Try very hard to include the cost of overheads, because otherwise they are subsidised. They're not being fully funded. To come back to your question, I just say, fundraising. You mentioned fundraising. If you don't spend much on fundraising, how are you going to get your income in?
Is this mentality, don't ask, don't get?
Yeah, absolutely. What are the other topics? Charities shouldn't make surpluses or shouldn't build reserves. Well, there's a balance. Charities should be spending their income within a reasonable period of time on their beneficiaries. But if they spent all their income, they wouldn't be able to operate. They wouldn't have the working capital, and they wouldn't be able to ride out COVID, the loss of income, if they didn't have reserves. So you do need to have reserves, but it's about coming to a conscious target and explaining it.
Make sure it's sensible.
Yeah. There's another issue. There's a perception that charities shouldn't do commercial activities, and we touched on that when I mentioned charity shops. A theatre charity is commercial in that it sells tickets for people to come to the theatre. A zoo sells tickets for people to come in. These are commercial activities. This is what's called primary purpose trading. If the purpose of a charity is to educate in the arts, then doing this by running a theatre, it needs to have it funded. So that's tax exempt and that's allowed. They may also be doing commercial activities that aren't so linked to their primary purpose. They may be running a charity shop, for instance, or they may be running a shop in a museum selling non-related items. In that case, they need to manage the tax. Often that's by putting it into a separate enterprise. Another myth: charities should be run and staffed cost-free by volunteers. What do you think of that, Emma?
Well, certainly I know that a lot of charities have volunteers, but when we have highly skilled charities that are offering care to those in need, those can't always be volunteers. They must be trained, qualified, etc. So, whilst that would be lovely, there aren't enough people in.
And we know that there are charities that do all their delivery through volunteers, such as RNLI, Samaritans, Citizens Advice. The backbone of those is volunteers, but even those have paid staff manage and administer those charities.
Is there not a myth in relation to trustee? Becoming a trustee and what you need to do in relation to that.
It's about how qualified you need to be. I mean, some will have professional qualifications because it's often useful and essential to have a trustee who is familiar with legal issues or with property issues or with financial issues. But some won't. And most important for everyone is just understanding the role and responsibilities, and if you don't understand what you're doing, the charity will train you in these, and that they have the skill and the willing to challenge and scrutinise in the right way. Some trustees will be professionally qualified, but that's not the overriding necessity.
Okay.
I think the last item we need to mention is that charities are less vulnerable to fraud. What do you think about this, Emma?
Well, I think with the ever-increasing cyber attacks and phishing, I cannot imagine that charities are less vulnerable. I'm sure they are targeted just as much as many other businesses. A lot of charities hold big databases with lots of private information that I'm sure people would love to get their hands on.
Yeah, I think you put that very well.
Before we finish, certainly we've gone through quite a lot of misconceptions, and actually, how do charities get the message out there that these are misconceptions and these are myths? What can they do to counter these myths?
Well, I think have a look at the guidance. It's good and it's short and it's well set out to share with staff and trustees, particularly if any of these myths apply to your charity. It's set out modular so that the people representing your charity can be equipped to challenge them. But at the same time, don't be shy to get on the front foot to talk about what your charity is and what your charity is excellent at. Some of you know, as I do, Emma, that some of the leanest and most effective organisations that we work with are charities.
Yeah, very much so.
We as a firm, and we talk to other sort of commercial businesses about knowing your business's purpose. Nobody knows their purpose better than charities. The commercial sector, I'm sure, can learn from that. When you know your purpose, you generate immense commitment from your staff supporters, and we know that in many charities, staff turnover is very low.
Certainly.
Because they are lean, because some of their income is hard won, charities adapt very fast and they often innovate to adapt just because they have to. And sometimes we know that charities and the people working in them are brave and they operate in difficult areas where generally most of us don't want to go. So do be positive. Don't just be defensive. Do be positive about your charity's strengths.
Yeah, thank you, Giles. That certainly is very interesting and actually really reassuring. We've reached the end of our slot today, so what is coming up next?
Next, we've got maximising gift aid, and on just reviewing, is charity right for you, or is perhaps social enterprise? better option. Before we finish, I'd like to say if you have any questions, do get in touch. We have links to me and Emma in the show notes, together with links to the firm.
Thank you ever so much.
Thank you for joining us for Larkin Gowan Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larkin-gowan.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.